Hi guys, welcome back to Financing as a Freelancer. Today we're going to cover the financial basics of being an employee. Why am I covering this? Today, the vast majority of artists in the United States are freelancers. So there's very few jobs that you can get in the arts industry that allows you to be an employee of another organization. However, most artists supplement their freelance arts income with being an employee of another organization. Think of the dancer who is also working at Starbucks or also working a bartending job or something like that. And then lastly, most of your peers outside of the dance world will be employees of their respective organizations, since the vast majority of Americans work as employees rather than freelancers. So, when you're out talking with your friends about their work, this will help you understand why their perspective on how they approach the finances of their job is different from yours as a freelancer, and it'll help you kind of suss through what that they're talking about makes sense for you and what doesn't make sense, and how you should think about your role differently from that of an employee. With that, we're going to jump right into it. Before we dive into the exact details of the finances of being an employee, let's first make sure we're all on the same page about how you even know that you're an employee. So when you show up to work, wherever you're showing up to work, you will be asked to sign one of two tax forms. You'll either be asked to sign a W-4, which is this form, and you'll see the W-4 letter and number combination represented in this top left corner, or you'll be asked to sign a W-9, as you can see denoted in this top left corner. These two forms visually look extremely similar, but you can tell their difference based off of the letter and number combination in the top left corner. If you're signing the W-9, the business you're working with is, working with you as a freelancer, whereas if you sign a W-4, you are an employee of that organization. So today we're going to focus on what the finances look like when you are an employee or when you sign this W-4, and in the next video we'll focus on what it looks like when you are a freelancer or when you sign the W-9. So, to explain this, I'm going to draw a basic diagram. Please excuse my drawing skills, they're absolutely terrible, but hopefully they provide you with some level of entertainment. So I'm going to point out three different key players in this diagram. The first player I'm going to point out is going to be the business that employs me. For today's example, we're going to pretend that this is the fictitious dance studio Seattle Dance Academy, which I will denote as SDA. So this is my employer. We're going to denote me, the employee, here at the bottom, with a very strange head shape. Oh gosh, that is awful. And then last but certainly not least, we're going to denote the IRS, the federal agency to whom we pay all of our taxes. So, how does it work when you are an employee of Seattle Dance Academy or any other business? First, Seattle Dance Academy gets paid some money from all of its customers to provide dance classes, and this is what we typically call revenue. I apologize for my bad computer handwriting, but hopefully that makes sense. Once Seattle Dance Academy gets paid to provide dance classes by parents, what does it do? It does a couple things. The first thing is it pays a series of what I will generally call expenses. I'm lumping a lot of things into this category of expenses. So these expenses will be, for example, the rent that Seattle Dance Academy is paying to its landlord. It might be paying for speaker systems and the electricity and the heat to heat the studios. They might be paying an accountant who will keep track of all of the income and how much the teachers need to be paid and all of those things. And this might also include front desk staff or any other additional staff needed to support the studio. Then, Seattle Dance Academy will pay two types of taxes to the IRS. So I'm going to draw two separate lines to distinguish between these two types of taxes. The first type of tax they're going to pay I'll denote as CT for corporate tax. So this is tax based off of the revenue or profit that they make. The second type of tax I'm going to denote as HCT for healthcare tax. Right now, it's probably not immediately clear what the healthcare tax is, but in a moment, I think it'll make sense. Last but certainly not least, Seattle Dance Academy pays its employees, of which I am one of them. So I get some money from them, either in the form of a salary or in the form of wages. And then in most cases, I will also get some healthcare provided by Seattle Dance Academy. This is where things get a bit dicey. So in the United States, if an organization has less than 50 employees, they are not required to provide healthcare to employees. However, all businesses with 50 or more employees are required to provide their employees with healthcare. So if you're working in a small dance studio, there's a chance that you might not get healthcare from them, and this is something you should definitely confirm. But if you're working at something like Starbucks or Target or whatever, chances are quite high you'll get healthcare. The other nuance with healthcare here is that you are typically only provided healthcare if you are a full-time employee. Typically, that means you work more than about 30 hours a week. So if you're a part-time employee, you might not be provided healthcare. But typically, again, in most of these cases, you are provided healthcare. Now, once you are paid your money, what do? There's two main types of tax that you also pay to the IRS. The first one will be income tax, which I will denote with INC for income. And secondly, you will also pay healthcare tax, which I will denote as HCT. So what is this healthcare tax that both you and your employer are paying? This is often described as Social Security, Medicare, and Medicaid tax. This is a tax that's used to fund, healthcare and Social Security, namely. This tax is about 14%, and what typically happens, or what always happens when you're an employee, is you cover half of the healthcare tax and your employer covers half of the healthcare tax. So this tax for 2020 is somewhere between 14 and 15%. So Seattle Dance Academy will pay 6 to 7% of this, and you will also pay 6 to 7% of this, in addition to the approximately 25-ish% that you will pay as income tax. So in total, you'll pay your income tax, and then you'll add another 6 to 7% of that, and that in total is what you owe to the IRS. Your employer will pay their corporate tax, they will add their 6 to 7% healthcare tax, and they will pay that to the IRS. For dancers, it is extremely important to note that the income tax that you pay to the IRS is only the federal income tax. The state that you live in might impose an additional income tax. So in the case of California and New York, both states impose additional income tax, in which case you will pay some money to the IRS, and then you'll pay additional income tax money to the state of New York or to the state of California. So in that case, you have three types of tax. You will have your federal income tax, you will have your state income tax, and then you will have your federal healthcare tax. The point of this is to realize that being an employee is a fairly stable position, right? So you know approximately how much money you're going to make. If you're a dance teacher, it might vary a bit, because you might take a week off to go on vacation and you don't get paid or something like that. But generally, you know how much money you're going to make. And you are generally provided healthcare. This is kind of the main point that I'm trying to point out here, is that as an employee, you are provided healthcare. And this is a huge reason why freelancers choose to become employees in addition to their freelance work, because they want to be able to be provided that healthcare, since providing healthcare on your own is extremely expensive in the United States. Lastly, you get a bit of a tax break for being an employee. Notice that this healthcare tax is paid by both you and the business. So the business is essentially paying half of the healthcare tax on your behalf. And so you can think about that as getting, a tax cut on 50% of this healthcare tax, because the business is paying that on your behalf. When you become a freelancer and you're both the business and the employee, things will get complicated because you'll be responsible for both sides of that tax. So the key to point out here is that you're provided healthcare and that you also get a bit of a break on your healthcare tax since the employer takes care of part of it. Hopefully this generally makes sense in terms of what it looks like to be an employee. Last but certainly not least, I'm going to tackle what types of jobs are there in the dance industry or in the arts industry that hire you as employees. There are three main types of jobs that you can get where you will be an employee. The first is being a full-time dance teacher at a dance studio. The second is being an arts administrator of some sort, so working for an arts nonprofit reviewing grants or some other type of administrative arts work. And last, dancing for a full-time dance company. So, contrary to popular belief, the vast majority of dance companies in the United States are not full-time jobs. However, if you are lucky enough to land a coveted position with a full-time dance company, such as the American Ballet Theater, Alvin Ailey Dance Company, Hubbard Street Dance Company, and a couple others, then you will be dancing for them full-time and you will be hired as an employee. Pretty much everything else in the dance industry is something where you are hired as a freelancer. So if you are judging for dance competitions, if you are teaching on conventions or teaching master classes, if you are performing for part-time dance companies, which are most of the dance companies in the US, if you're doing commercial work, so if you're an LA dancer who is dancing in a lot of music videos or whatever, all of that work is typically done as an independent contractor, and so the finances of that is something we'll talk about in the next video. Again, most dancers choose to supplement their freelance income with some version of being an employee, whether at a kind of blue-collar position or something like Starbucks or Target. And so if you're choosing to do that, then the portion of your income where you are an employee will look like this. Hopefully that all makes sense. Let me know if you have any questions, and if not, I'll see you next time when we talk about the finances of being a freelancer.